Hi everybody, I'm here with Anthony from Fintego Advisory, and today we're going to be giving you some educational pieces in relation to some insurance. So welcome, Anthony.
Thanks, Danielle.
Anthony, so you are the owner of Fintego Advisory. Can you tell me a little bit about what it is that you do?
Sure, yeah. So Fintego Advisory, we're a wealth protection specialist financial advice organisational firm. I'm the director and senior advisor there. So what we essentially do is make sure that there are strategies in place to protect people's wealth. It's as simple as that.
Yeah, okay, excellent. So we thought this would be a great thing to talk about today, particularly over a glass of wine, because I think that anything to do with talking about getting your affairs in order is best done over a glass of wine. So that is our theme, and we're having a bit of a casual chat in relation to all things insurance related. And the reason I thought this would be a really good thing for us to educate people about is because from a deceased estate perspective, I deal with deceased estates where a deceased person may have had some personal insurance in place, which is fantastic.
Yeah.
And particularly for a surviving spouse, that's a real lifesaver when it comes to the financial perspective.
Absolutely, yeah.
But particularly in terms of some of my younger deceased estate matters where they don't have this kind of insurance in place, it can really cause some stress on the surviving spouse. And I'm focusing particularly on surviving spouses because that is what I see a lot of.
Yeah.
So I thought I'd get your views today and some pointers in relation to what kinds of insurances there are that people can look at having in place to protect their loved ones if anything happens.
Yeah, well, what we do absolutely dovetails into what you do, right? We're talking about, the worst case scenario, what happens in the event of a death or a death of a loved one. And it's not so much about them, it's about those that are the surviving spouse or children, those that are left behind. And it's hard enough as it is going through those circumstances, absolutely, without having that financial stress. Now, there's always going to be that stress, but being able to take away that pain in a simple way to do that is to organise personal insurance that can cover off some of those pain points.
Yeah.
No one really wants to leave a massive amount of debt or in a circumstance where people have to sell assets quickly in order to survive financially. We want to leave a legacy, right? And that legacy involves not necessarily just financially, but also leaving people in a position where emotionally they can handle these situations a bit better as well.
And I know even from my own personal perspective, when I was getting all of my insurances and things in place many years ago now, the main consideration for me was I wanted to make sure that there was a big enough payout for my husband to be able to just pay off the mortgage.
Yeah.
Is that a common thing that you see when people want insurance?
It's probably the primary reason why people would engage for life insurance, especially. There are many ways to think about life insurance, but absolutely paying off the primary mortgage, because no one really wants their surviving spouse and children to have to sell the house quickly in order to repay the debt. The bank are going to be on your back straight away. They don't really care. So they want their money, and it's making sure that the family don't actually have to move their life because something unexpected has happened. To stay in the family home, to keep the kids in the school that they're currently in, to make sure that those decisions financially are taken care of without actually having to make a huge change to the circumstances.
That's right.
That's the really simple one. But there are other reasons why you would organise a life insurance. I'll talk about the kids. There might be kids in school, whether it be public or private education. There's a cost with that, and if somebody's the main income earner and that provides a substantial cash flow into the family unit to pay for those expenses, those sorts of things can be left alone, left out rather.
Left out.
You don't really want to have the kids to change schools, things like that, because they can no longer afford it. So that's another reason why someone might want to have the life insurance in place.
And other than life insurance, what other kind of insurances do you find clients like to come and see you to have in place?
Well, there's a range of different things. So if you think about your lifestyle and what funds your lifestyle, it's your income. It's as simple as that. So you are your most valuable asset. Your ability to actually generate that income is what you and your family rely on, and there comes a value to that. From an income perspective, you take that out of the equation, things fall over pretty quickly. I know certainly at these certain times, most people can't really survive longer than a couple of months, maybe 6 months at best without an income, and we can't always rely on sick leave, annual leave, things like that. Or if you're self-employed, we don't have those.
We don't have
them. That's right. So we don't get those benefits, but so the income is income protection rather is making sure that if you cannot work because you're injured or you're ill, that the actual income keeps flowing in. One of the things that's quite important to understand is that whilst we tend to be living a little bit longer, there tends to be an increase in people living with disabilities or illness.
Yes. Yeah.
So as opposed to previously where we might not necessarily know what's happening to our health, or like most guys, we don't go to the doctor, we don't talk about our health, but these days a lot more people are aware of their health, so people are living a lot longer with disabilities and things like that, and it may mean that they can't work. Mental health is a big one. Musculoskeletal injuries, another big one. So these are things that take people out of the workforce. So making sure that you've got income coming in, offsetting that risk to an insurer. So do that through income protection insurance. It's really quite as simple as that.
Yeah. And what do you find are some of the roadblocks to people getting this kind of insurance in place?
There's a few roadblocks. I often joke that people don't think about their insurance advisor when they first get out of bed in the morning. It's not.
They should.
But they should. It's usually not until a life event happens. Something happens to a friend of theirs, or a family member diagnosed with an illness or cancer or something like that, or they've had an injury, or a good friend has passed away. They're the usual trigger events that people start reflecting on their own circumstances and think, wow, maybe I should look into this, or have I got those arrangements in place? So they're the main trigger events that people would come to us. Or alternatively, they may have been with their estate planning lawyer and they're seeing that that those things aren't in place, or they're sitting with their financial advisor talking about the superannuation and investment side of things, and they can see some gaps. There's really not much point in having an investment plan or a wealth generation plan in place if there's not a plan B behind it. So wealth creation relies on income. Yes. It relies on your ability to generate an income. So you need to have the insurance behind the scenes to make sure that plan can continue. So they're usually the reasons why people would come and talk to us. Yeah.
And I know from a deceased estate perspective, a lot of my deceased estate matters that I look after, sometimes the older the deceased person is, the more likely they are to have some insurance in place. But it's the younger deceased people where there's often not, and people are often quite surprised to hear that some of the post-death related matters that I look after, a lot of the people that have passed away, they're younger as opposed to older. So people are dying in their 20s and 30s for a range of reasons, and that can be recreational activity, it can be work accidents, it can be a whole range of things. But I find from a deceased estate perspective that it's the younger ones that don't have the insurance in place. And I'm guessing your view is that the younger you are when you get this insurance in place, the better set up that you are, and the easier it probably is to get the insurance as well. So can you talk a little bit about how important it is to get that kind of thing in place when you're younger?
Well, when we're young, we think we're bulletproof, and to an extent we probably are. And there's different risks at a younger age as what there are older age. You might not have quite as many financial responsibilities, or you may not have a spouse or children or things like that. But it doesn't matter. You still have a need depending on the circumstances. But one of the roadblocks that you mentioned is the ability to actually obtain cover is subject to medical disclosure. So when you're younger, you would like to think that you have a cleaner bill of health, and it might be easier to establish some levels of cover or some insurance cover early on in your career or in your life. And as you get older And if your health changes, then it makes it a bit harder to obtain insurance at a later age when you probably really need it.
Yeah.
So there are, the earlier you can do it, the better. It's as simple as that. And there are opportunities along the way to actually increase cover without actually further medical underwriting, depending on the insurer and the situation and what have you. But it's similar to, you have a lot of younger clients that say, I don't need a will. What do I need a will? I don't have assets.
Yeah.
But they still do, right? Because it causes a lot of pain for the family.
Yeah, that's right.
If something goes wrong and they don't actually have a will in place.
Yeah. And I think in terms of the way I look at, I guess, estate planning, and you probably have a similar view when it comes to insurance, I look at estate planning as an investment for your family. So you invest in a lot of things during your lifetime for your family, whether that's assets or whatever it is. I see estate planning as an asset because you're putting things in place to make things as easy as possible for the loved ones that you leave behind when you pass away.
Yes.
And my view is insurance is probably a little bit the same. It's an investment. It's costly, but it's an investment so that things are easier for the people that you leave behind.
Yeah, and when we insure our car, our house, things like that, no one likes to pay the premium. It's one of those things that we have to do. Unfortunately, it's what being growing up's all about. Adulting, and that's when younger people, they start to realise this. But I think the other challenge too is there's not a lot of education around it when they're younger, whether it be in school or beyond that, and there's not a lot of awareness. There is a lot of people that are underinsured. They may be relying on superannuation as their means to cover off estate assets, or the default, let's say, standard cover that is automatically included in your superannuation. Those sorts of things are great, and that might be suitable. But often we find that it may not be enough, or it's not suitable, or that depending on that individual situation, it might actually not end up working out the way that you would expect in the event of a claim, which is a big risk as well. So where advice comes into play is understanding a personal situation, what it is that the outcome needs to be, starting with the end in mind, and developing around that, as opposed to just something that's put in place without you even really knowing what it does, and you're just hoping that the money that's coming out of your super fund or the amount that you're paying in premiums is going to do what you think it's going to do. But is it? Is it really? When you're not really sure what it's going to do?
Yeah. And how often should you review your insurances? I know from my perspective it's been reviewed quite a few times because the amount of money that's owing on the mortgage changes, and the ability of your spouse to be able to continue to pay a mortgage if anything happened to you, and those kinds of things. How often generally do you think insurances should be looked at?
Yearly. When I reach out to clients, when we do annual reviews, we're just checking in what's changed. If there's anything that's changed, we need to understand that may have an impact. It might not be that anything's changed, and that's okay. It's just really about checking in. But if we do need to make changes, then it's important that your lifestyle changes. No one has the same lifestyle every year, every 2, 3, 5 years. Things change. So if you organise insurance when you're younger, or you organise insurance at a date in time, most people kind of just put it in the drawer, shut the filing cabinet, forget about it, in the hope that it's going to actually do what we say it's going to do. That's right. But if you don't actually review it, is it really going to do what it is that you expect it to do, because your circumstances have changed? So it's really simple. A review every single year. You're not necessarily making changes all the time, but it's just making sure that we have the end in mind, so that it actually does what you expect it to do in the event of a claim, because that's what we pay premiums for, right? And talking about things like car insurance and the cost, and everything's going up, and it's about managing that as well. So managing clients' expectations, and the review can take into consideration that cost as well, and making things practical and affordable for people. And insurance, any insurance is not cheap. So I guess the review process means that you're also keeping an eye on people aren't overinsured when they don't need to be. Why pay extra when you don't need to? If you forget about it and your debt's reduced, and maybe your circumstances have changed, your kids have grown up, they're off your hands, they've got lives of their own, and those things, we can reduce cover. We can make changes to income protection insurance along the way. Priorities change. It's as simple as that. So we just need to make sure that you're doing that along the way. Yeah, no one likes to waste money on insurance premiums.
Yeah, exactly. So just to summarise, some quick points in relation to what are the benefits in terms of making sure that you've got all of your personal insurances in place.
So if you think about disability or illness, the benefits are continuity of income, continuity of your circumstances, making sure that you can keep the show on the road, essentially, whether that be through income protection to cover your income. You might have critical illness insurance, which is to help with medical costs, so that if you have a cancer diagnosis, heart attack, something like that. Worst case, where you're permanently incapacitated, you need to pay off debts, potentially pay off debts and look after for the family. And if in the event of your death, then it's about who are you leaving behind, and what sort of legacy are you leaving behind. Are you leaving them with assets, or are you leaving them with liabilities? So, and obviously we want to leave them with assets.
Yes, exactly.
Yeah.
And I guess also one of the main points is to make sure that it's something that's in place when you're younger, so that you've got, a good policy in place from an age where you don't have some of the medical hurdles that you have when you're older as well.
Absolutely. Yeah.
Okay. Well, thank you so much for joining me this afternoon to have a chat about insurance. I'm sure everybody will be appreciative of the information that has come out of today's discussion, and appreciate your time.
Thanks, Danielle.
Thank you.